This is our Forex blog for February 8th, 2013, and like we do most days, we show mainly how our currency meter finds which individual currencies are strong, which ones are weak, and you simply buy the strong ones versus the weak, or if the top pair is the weakest one, you sell that one versus a strong pair. One of the things that's new is our indexes. We have a dollar index, euro index, yen index, Australian, CAD, Swiss, pound, and it lets you see a lot more than just our past currency meter, which you can still put underneath these index charts. For example, you can draw trend lines on an index, and when that trend line finally gets broken, the more times it touches, it almost touch here. You could count that as 1 touch, 2 touch, 3 touch. Anytime a trend line gets hit 3 times, usually when it breaks through there, you're going to have a counter trend move. And you can see here at 7:30, the dollar trended up for a little over an hour, and then it went sideways, and then it continued. So trend lines allow you almost, for lack of a better term, to almost perfectly time when to get into a counter trend move. And anytime a trend line gets broken after, a big down move, and the weekly trend's up, the monthly trend's up, which is the color strips on the bottom, obviously that's more likely to continue. If the daily, weekly, monthly trend were down, and you did a counter trend move like this, it might work its way back up to the hourly and probably fail to go any higher. So everything's, in context. So what we want to do is find some high probability trades. You can see the dollar pretty much was trending down until this trend line got broken at 7. So what I want to do is I'll just put D for down, and then it's up from then on out. And once we do this, we can know which currency is going down and likely to continue down, which ones are strong, and then pick, and we can show you the individual charts. I should change this up. All right, so that's the dollar. Now let's take a look at the yen. Clearly, this one's up today. It starts off pretty much chopping around the hourly moving average, and as you can see, it's making a series of higher highs here, and then it finally breaks out. And this is why I love our new indexes. And chart-based patterns can now be traded a little bit before 1. This is strong, and it pretty much was strong again until this trend line here got broken, and then it went down, rallied up, went down. So that was pretty much strong until 9. Let's just look at a few other pairs. The euro started last night slightly above it. You can see it's trending down. The daily, weekly trend are down. Went back above the hourly and then shifted down and pretty much trended down all day. And I love the new indexes because you can do event-based trading. In other words, if a currency's daily and weekly trend are down, monthly trends up, this one kind of is working its way up. You can use trend line as an event. When the trend line gets broken, you look for sells. Whatever currency is strongest at this time, you sell the euro against. Or when it breaks its hourly, and I also like to sell it when it breaks the 15-minute moving average, the green one. Also, if the currency hadn't already come down a lot, when it breaks, it makes new lows underneath. In other words, at this point right here, the euro is weaker today than it was all day yesterday. And of course right here, and ultimately it went down again. Notice how that previous day's low becomes resistance on the way up. Great place to look for a sell. Very high probability, in my opinion, probably 70, 75, 80% likely to be a safe place to look for sells. But again, the euro is weak pretty much all day. So let's put that on here. And I put a circle around 3 to 11. This is the most active times. Let's take a look at the pound. It starts its day off. The trend is down because it's underneath the hourly moving average. And sometimes you'll have false breakouts from underneath above the hourly. So if you went into a trade right here and here, you probably had a small 6 or 7 pip loss. And then it took off and it pretty much trended up. And you have a trend line break here, a break from below to above the hourly moving average, and it also on that same bar pretty much went above yesterday's high of the index for the pound. So I would say this one's weak until 7. Alright, so now that we have a list of currencies that are strong and weak, you can see the dollar was weak most of the day. So was the euro and the pound, but the yen was up. So we want to sell the euro yen, sell the pound yen. Alright, that's it. That's all you do. So let's bring up a regular chart. Euro yen, we're looking to sell this. The majority of the day. And guess what? Where is it? What is the direction? It's down. You know, you could have sold it right there. This isn't much of a pullback. I'm not sure if I would have sold that, but anytime, sometimes you get a little bit of a pullback and then it goes sideways on a nice little rectangle pattern. That's pretty high probability trade. You also have a nice 15-pip pullback right here, and then this one's, you know, almost ideal because it's a very significant pullback right here up until 4:30. If you looked at the euro, it probably looked relatively strong from that time. And look where it stopped, right at the hourly moving average. So great place to sell the euro. And let's take a look at the yen. This thing basically was way above the upper containment band, so it really needed to pull back more. And it came down right to the previous day's high, which acts as a support in the 15-minute moving average. So both the euro and the yen were going and trending in opposite ways very powerfully. They both made pullback trades right to support and resistance areas on the individual charts. It doesn't get any better than that. As you can see, it pulls back very fast, over 75 pips. We know the pound also was weak today, so you could sell the pound yen with very high probability, and of course, exact same thing. You sell right there, didn't make much, maybe 20, 30 pips. You sell again right here, and you know, maybe you got out of it somewhere in here with 50, 60 pips. You sold that little pullback, you made money, and again, 4:30, the yen was ready to go back up. It had exploded up, and it pulled back to the previous day's high. Any kind of a resistance area, once broken, then becomes support. We've taught that for the last 6-7 years of our training. And so you have a pullback trade right here, and boom, again, another 75-80 pip move. Now let's take a look at the dollar. Now it's mostly weak today, and the yen's strong, so we would want to be selling the dollar yen too. And again, down, down, pull back. Notice right where it goes, 4:30. When the yen was likely to go back up, and the dollar was already weak, perfect timing. You know, almost to within a minute or two of ideal timing to get you into these trades. And that's why I love these indexes. Now here at 7, you can see the pound start to get strong. The euro is already weak. So what do? We sell the euro pound at 7. Here's 7 o'clock. Using our index, you sell it. And remember, each pip in the euro pound is equivalent to almost 2 in the euro dollar. So pretty much a 10 pip move is like getting 20 pips. So think of that when you're looking at this. That's 20, 40, 60, 80, 100 pip move. Equivalent to 100 pips in the euro dollar right here. And a nice little pullback here at 9:30. Let's take a look at the pound chart to see if this one had pulled back. It did. Notice that pullback there. Maybe you wouldn't have gotten into it exactly there because there was no support area, but when it went down and went sideways and broke out a little bit later, closer 10 minutes to 10, good place to get back in this. 10 minutes to 10 would be right about here. You get short right there on that bar. Let me zoom in so you can see it. Right here in this bar. I mean, what a great place to get short. Basically 2 bars off the maximum high of that pullback trade. It's just a very stress-free way of trading, in my opinion. Now let's take a look at some of the other pairs. We'll look at the Swiss. This one was trending down all day, right? So we know the pound was strong at 7. Could have bought the pound Swiss at 7. Let's scroll back and look at this. Look at this breakout right here. Up 10, 20, 30, 40, 50, 60. Yeah, remember, 10 minutes before 10, the pound was going up again, so you get long again right here. Goes from 80 to 30. It's 50 pips. So, 100 pips worth of easily found trades in the pound Swiss. Let's take a look at the CAD. This one's also trending down all day. And notice how it came down to the previous day's most actively traded price, found support like it almost always does, breaks down, also happens to break the previous day's low. Great place to go short, great place to go short on the pullback here, the resistance area, the moving average. And because the CAD's weak all day, obviously the CAD yen you want to sell all day. Let's take a look at this. I mean, pretty much a no-brainer. And remember, when the pound got strong at 7, we want to buy the pound CAD at 7 o'clock. And as you can see, just absolutely exploded up over 100 pips. And again, slightly before 10, you're looking to buy this. And, so you would have been long somewhere around there in the middle there. Probably with your stop underneath the swing low. And it might have tagged wherever you put your stop. Maybe you put your stop a little closer and you got stopped out with a 7 or 8 pip loss. No big deal. You get back in again and you make 50 to 70 pips there. Let's take a look at the Australian. This one's strong, right? And we know that the dollar was weak earlier, right? Yeah, it's going down until 7. So we're going to look at buying the Australian, which is strong, especially when it breaks out from underneath above yesterday's point of control. It's above the hourly pretty much all day except for 10 minutes. It's above its 15-minute moving average. You want to buy the Australian dollar. And as you can see, just absolutely effortless uptrend. Now we just showed that the Swiss and the CAD were weak, so you can buy the Australian CAD, effortless uptrend. Australian Swiss, not so much effortless, but pretty much, went up. And these are not very big of moves. Pullback, up again. You wouldn't have certainly had any kind of stress in your trading. And here's the New Zealand, which is basically in a choppy phase. Later on breaks out right here at 6:30. You might have bought this 6:30 breakout. The dollar was weak. Let's take a look at the New Zealand dollar at 6:30. And it went just barely up about 7 pips. But, that's probably the worst trade of the day. And this currency was chopping all day. So if you saw this explosion up, came down to the hourly, found support right here at 7, you might have bought the New Zealand, what is that, 7:30? Here's 7:30. Would have probably had a loss. So that's the worst trade of the day. And then also notice when the uptrend, obviously this was never strong, that it had a failure at the high, false breakout above the high, tries to go higher again, fails to make higher highs, breaks the trend line here off the lows at 11 o'clock. Let's see if the pound was strong at 11. Certainly was. Weak New Zealand, strong pound. Pound New Zealand at 11 probably shot up. Actually, this thing was going up even before that because the pound was one of the strongest ones today. But coming up to 11, somewhere around here, you can see it still went up about 35 pips. Or if a little bit after 11 you bought this little pullback right here, again, you might have made 10 to 20 pips on that one. So pips are pips. You only need 10 a day to double your account every 2 months. So obviously looking at our indexes of each currency, you can see the power of this. On the chart patterns, you have a little flag pattern here in the pound. Great place after an explosive move. Our Forex trend intensity shows that this is one incredible, powerful up move. And anytime you see this followed by a pattern, that is a continuation pattern. Wedge patterns and also flag patterns are very good continuation patterns. A wedge pattern, a lot of times after it explodes up, you'll kind of see volatility getting smaller and smaller. This is more of like a flag that you typically see more in stocks. But because we're comparing every pound pair, the pound dollar, the euro pound, the pound yen, the pound Swiss, the pound Australian CADs, New Zealand, if it's going up, it means the pound's pretty much going up against most of them. It's certainly not going down too radically against any of the other pairs, or else the index will never show it going up. A lot of times in the index you see it going up and down because it's going up against 3 or 4 currencies, down against 3 or 4 currencies, and so the index stays in a very tight range. Anytime you see a tight little range that's going up and down, you wait for a breakout. That's it. You just sit and wait. And when it breaks out, you buy it against the weakest one. That's it. It can't ever be simpler than this.